Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me this afternoon, we have Vincent Ambrose, Chief Commercial Officer of FranklinWH, as well as Brian Meegan, partner at Kupfer. We're here to discuss the climate tech landscape and meeting energy demand in the U.S. and how this could impact the energy M&A environment going forward. Gentlemen, it's great to have the both of you with us. Welcome to Trade Talks. And Vincent, let's kick it off with you. It seems as if the climate tech environment is front and center, whether you're thinking about commercial or enterprise. How do you view the current environment right now, and as you're thinking about solutions to meet this energy demand?
Thanks, Jill. Appreciate you having me today. So great question. For the first time in like 25 years, energy and energy demand has really been at the forefront of the discussion, with so much demand creation happening with AI, as well as this growth in data centers here in the United States, along with other indigenous growth. So it's a great story. It's going to be a challenge for us as a country to really rise up and meet those needs. Energy generation doesn't happen overnight, right? It takes decades between production and transmission. But it's definitely going to be an exciting time for companies that are playing in the residential space like Franklin Home.
You know, Brian, Vincent brings up an interesting point when you think about it doesn't happen overnight. And it feels as if with growth in AI and big data and so forth, that we're really going to have to take aggressive measures to meet that demand. Were we not thinking about these demand issues before, or did it just creep up on us as generative AI and ChatGPT became part of the everyday conversation? It feels as if, and pardon the pun here, that a light switch was just switched on, and now we are critically thinking about energy demand.
Yeah, thank you, Jill. I think that AI certainly was a bit of a light switch. As we learned last year, it seemed to have rolled out and exploded onto the scene, though it was in varying forms of more early development for a long time. But now the energy demands and because of that explosion, the resultant demands for energy are becoming much more clear. That said, we have ramped up oil and gas production to levels that are historic in order to meet certain demands. Some of those are for the electric grid, but others. And now we've had a long-standing federal policy that is supporting alternative energy production, and I think we're trying. As Vince said, we're going to do our best to meet that demand, but it's coming.
Yeah. So Vince, let's talk about that a little bit more. What are some of the bigger challenges, and how are industries thinking about the approaches?
I would say there's multifaceted challenges. The AI and the data centers, as Brian mentioned, kind of hit the scene and really started to drive demand. I think we even saw it before that with what I'll call blockchain demand and cryptocurrency, and a lot of the energy that was being used to drive and grow that industry. I would say some of the big challenges we have are production themselves. Right, it takes a long time to stand up a natural gas peaker plant. We're talking many years, as well as solar and wind. And even if you can build them, just getting the interconnection into the grid can take multi-years. There's a backlog of an unfathomable amount of production that can't get to the grid because of interconnection issues. So that those two combined with transmission. A lot of these production facilities are in locations not near the demand, and moving electrons from one spot to the other is a real challenge. Siting a transmission line could take 10 years plus. So all of those, kind of combine to make the challenge a multi-year challenge.
Right. So Vince, let's think about it from the consumer perspective for a moment here, because there were a number of legislations that were introduced or signed that had really aggressive goals, right? Whether it's, having to have this type of alternative energy at your home or your car by 2030, 2035. And to your point about getting the supply part online, scalability and affordability. I mean, you can have as many goals as you want, but if it's not available where it's practical for consumers to use, the effort is kind of stymied. It feels as if the consumer wasn't part of the end game.
I think the consumer is struggling a little bit, right? I would look at the EV sector. You saw the automobile manufacturing get way out ahead of infrastructure, right? So we have these wonderful EV cars that we can't find a charging spot for, which then hinders adoption. So I think the industry is going to continue to go through these fits and starts as we try and build out a robust distributed energy storage grid. Where Franklin Whole Home really plays in is being able to have homeowners kind of unplug from the grid, be able to use our technology and our storage, pair it with solar, and be able to manage and produce all of their own electricity and not be a burden on the grid any longer.
Yeah. And then, Brian, when we think about perhaps a more friendly regulatory environment and not being so reliant on traditional energy resources. I mean, we saw what happened in 2024 when nuclear started to make the headlines with, Microsoft looking to invest in areas. What other forms of alternative energy do you think will continue to dominate the headlines, and how will deregulation have a play in all of this?
Well, I think, as you said, nuclear is going to, I think, enjoy a renaissance of sorts. It's going to be small nuclear. I think geothermal is another one that has maybe a bit insulated from some of the variations in regulatory schemes that we've experienced over the last few years. I don't know if we're going to see a rollback of the solar credits, some of the EV credits. I would expect that we'll likely see some of that in favor of oil and gas production, but that's a question mark. But undoubtedly, as Vince said, we've got a lot of catching up to do, and finance is going to roll into that a lot. Our clients are looking for ways to finance through this long period of scale up.
Yeah, and that's a good point that you bring up, because I want to get into the M&A environment in just a moment here. But as with any new administration, not specific to Trump, there are a lot of policy goals that are in place, but the execution is really what matters here. So it almost makes it a challenge to know what that environment, the operating environment, what the tax credit, what the priorities are going to be in terms of which alternative energy solutions are most attractive. How do you think that impacts the M&A environment as you're looking for either not to, organically grow a solution, but perhaps bring it in under your umbrella, or looking for alternative forms of financing? Does it become one of these things where we're not sure what 2025 is going to look like, which is what we're saying in 2024? Or do you think there's more a clear roadmap?
I think there's so many variables on the table right now that, our clients are struggling to figure out with the tariffs alone. You've got steel and battery components that are now experiencing some of these tariffs of 25%, depending on what country they're coming from. You layer that on top of an uncertain regulatory environment. How do you plan in that environment? And how do you not experience a distressed balance sheet where suddenly financing, you don't know how long out you have to maintain that financing? That's where a larger player, someone who's a little more cash rich, has an opportunity to pick up some of these clients that don't have the wherewithal to sustain for that extended period. And we're seeing, I believe, an increase in activity there, where you've got opportunistic buyers with a little bit of cash that can come in and take on these smaller players that just can't stay above the waves in this uncertain.
Yeah, especially, as it relates to tariffs, if input costs continue to increase and if interest rates remain higher this year, as most economists are forecasting, it really does add another operational layer to it, in addition to the actual demand challenges that need to be met. But Vincent, you noted something really interesting, that 1/4 to 1/3 of energy that's produced by utilities, it's lost before it even reaches the end user. Are solutions being thought about or in production that perhaps might take on a more hybrid role, or may make it more efficient with this energy that's lost?
Sure. We kind of refer to the grid that we have today as grandpa's grid, right? This thing was built, 75 to 100 years ago, and it was meant to be a unidirectional business model, right? I produce electrons, I send them to you, and that's it. In the future, what we're going to see is we're going to see a more distributed energy resource grid, right? Where we're actually putting production and storage close to the demand, whether it be a business, right? What we call behind the meter, or with a homeowner. And then the utilities can actually draw upon these distributed resources as they need to help support the grid. So we become much more interactive, and we start using a lot more technology to make better use of those electrons that we do produce.
Yeah, because that's a concern of mine. With the technology is evolving much quicker than we're able to supply that demand. And then when do you start thinking about how do we triage, if there is a major power outage, how do we triage what energy goes where? Right. And I think, to the solution that you were talking about, where it becomes more localized and you're able to feed on these other sources that remove some of the uncertainty. Again, how do you triage that? Does it go to the data centers? Does it go to, critical infrastructure? Does it go to medical facilities? It seems as if, an immediate near-term solution doesn't necessarily exist for that yet.
Well, when the grid goes down, it's a challenge, right? Or is forced to go down, like in California, where they have to do rolling blackouts because of fire risk, right? Which in 2025 is going to be even more exacerbated after what happened in the Pacific Palisades. Utilities have a real challenge on their hand. They're going to have to figure out how do they balance their customer needs. We're working with a utility who is actually deploying solar and our storage solution for medically needed individuals. So if the electricity goes down, they're at a life-threatening risk. So instead of having to worry about the lines going down, they actually have their own generation and storage, and it literally saves their lives. So this is where the utilities need to prioritize their capital investments.
So Vince, it sounds like it's going to be public-private partnerships, right? The 3 Ps that are going to more effectively execute on these, larger goals that have been established.
I think you hit it right on the head, Joe. The fact of the matter is the grid is the grid. It's been invested in for almost 100 years now, and it serves a life-serving purpose, right? But between government and individuals, right? We need that government tax incentives to help individuals invest in their own energy security, right? No longer requiring some company to provide it for them. They can provide it for themselves. It's a little bit expensive. It's like any other capital purchase. With a little bit of support from the government tax credits, we think that private purchase or private and public participation together works really well.
Right. And Brian, I'd like to get your thoughts on this as well from the regulatory perspective. If you see PPPs being the catalyst that's going to be able to effectively execute on these rather frothy goals that we have.
Absolutely. I think we'll see that probably a lot more at the state level. I think the federal level, with the push to shrink that area of government, I don't know that we'll see as an active group coming out of Washington so much as each of the states trying to find ways to cooperate with their local business community to produce results that are, as Vince said, more localized and specific and targeted.
Yeah, that seems to be the trend overall, is moving, many of these larger issues to the states for that reason.
Yeah.
Yeah. All right. Well, appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.